Financial Accounting 16B, Bank Reconciliation and Proof of Cash, Part 2. This is Ken Boyd, the owner of St. Louis Test Preparation. Here's the Facebook page and our website. I think this is a difficult topic, this proof of cash, and what I've put up here is another way of doing the same bank reconciliation based on, and if you weren't on the first couple of videos, based on this Wiley link that explains the bank reconciliation process and proof of cash. So the method I have here is called, it's the 4-column bank reconciliation, the proof of cash, but it's also called, I'm going to make a correction here, bank and book balance to corrected balance form, which is a mouthful. But essentially what's going on here is that to start with how you visualize laying this out, we have the bank reconciliation on the left for October 31st. We have a version of a bank reconciliation on the right, November 31st, end of the period. We have receipts and disbursements of cash in the middle. Now, if you watch the prior video, 16A, you're going to see that this version is a little different. And the reason it's different is that there is a correct balance line here in the bottom. So if you can imagine, we've got, just think about the bank for a minute. We've got balances off of the bank statement for the beginning balance in cash, bank statement receipts, bank statement disbursements, bank statement ending balance. We have reconciling items during the period for both the beginning balance, the receipts and disbursements, and the ending balance, and then we get corrected balances down here at the bottom. Now, I may have found an error in the template that's online, but what the important thing to know here is that you're going to reconcile to the same correct balance, 21,044. You're going to do it in two pieces. You're going to do the bank activity and reconcile to a correct balance, and then you're going to do the book activity and reconcile to a correct balance. And again, I found an error, I believe, in some of these sum totals. So in any case, let's go. You'll also notice that the reconciling items down here in the books section are the reverse of the reconciling items that you found in the proof of cash in version A that I went over, where there is no distinction, there is no correct balance put in the middle. This that was on video 16A is one big reconciliation. The version I'm using now has subtotals, and so we reconcile to the corrected balance using the bank statement, and we reconcile to the correct balance using the book figures. This is balance per book, and I'm going to add a little note there just to make it more clear. So I'm going to start off with the book at the top, and let's reconcile that first. So just take the sections one at a time. The balance on October 1st looks like just about any other type of bank statement. I have a beginning balance for the bank. I add deposits in transit. I'm going to go quickly on this. I subtract outstanding checks. I get to a corrected balance. No big deal. Same kind of thing over here. I'm adding deposits in transit. I'm going to subtract outstanding checks. I get to an ending balance. No big deal. What's in the middle now? Just like we saw before, this part has not changed. We have receipts for the bank statement. We have disbursements for the bank statement. We have a deposit in transit during October 31st that the bank didn't know about. So the bank's receipts are overstated because the bank counted these deposits in November, so we have to subtract to get to the correct balance of receipts. We have a deposit in transit on November 30th, which should have been posted in November, but the bank statement didn't see it yet. We have to add that to get to the correct receipts. And you can see it also gets added over here in the November 30th bank rec. Outstanding checks as of October 31st. The bank incorrectly added those outstanding checks into November when they actually posted in October, so we have to subtract the 3,700. Outstanding checks November 30th. Should have been a disbursement on the bank's records and were not, so we have to add it. Bank error, check charge to a client. That gets subtracted. That gets subtracted. So you can start to see how that's setting up. And that section that I just did is not a lot different from the top part of the transactions that we did over here. What I have highlighted here is what I just went over on this version. I think it's real tough. This is a real tough thing to follow. Now, when I do the book version, what I am doing is dealing with the transactions that are in the bottom part of the 4 column that doesn't have subtotals, but the handling of these accounts are reversed. The handling of these accounts are reversed. I'll show you what I mean. Okay, let's think about it from the book's perspective. Interest collected by the bank. The book doesn't know about it yet, so the book has to add that receipt to receipts in the accounting records. Okay? The company wrote a check for too large an amount. That means that the book, the company's disbursements are too high, so we have to subtract the error. Disbursements were too high. Bank charge, the book's records show too few disbursements. We need to add that bank charge as a disbursement. An NSF check that the bank counted as a disbursement, we have to add that disbursement to the book. Now, again, I found what I believe is an error in the reference that I'm using, the website. So there's a $58 difference that I had to account for because I think there was an error in the spreadsheet that was online. But here's the point. So that's why I put error on bank statement up here. I'm going to move that over so you can see it. What's happening is, if you've done this correctly, is that this correct balance, 21,044 on the book, should match the 21,004 corrected balance on the bank. Okay. One last thing. Let's think about how this compares with the bank reconciliation that we did for November 30th over here. Okay. So let's go over to this November 30th column. We've got deposits in transit, less outstanding checks, and we add a bank error. Let's go to the bank rec. Deposit in transit, subtract outstanding checks, bank error. We get down to a corrected cash balance. Looks just like what's going on right here. This section of the 4 column looks just like this section of the bank rec. Again, over here. Here are the reconciling items per the book. Now, if I go over here, I add the interest in the bank error, I subtract the bank charge and the NSF. That's hard to say. Over here, again, proof of cash. I add the deposit in the bank error. I subtract the bank charge and the NSF. So that this section, the right-hand column of the proof of cash, using the subtotal method to corrected balance method, looks just like the bank reconciliation for November 30th. So if you can set up this correctly, the bank rec information, in the right-hand side of the proof of cash, you're getting to where you want to go, so to speak. You're getting to where you want to go. That's as far as we're going to get on the proof of cash. I know that's a difficult concept. Proof of cash, book and balance to corrected balance form. Remember that we have our toughest accounting classes on the website, stltest.net. These are topics that I'm asked about the most. I teach them continually. The dates are always updated in a small group live chat. And also, I teach the book, Cost Accounting for Dummies, that I wrote in a free live chat session. Try to do it once a week if I'm available on Saturdays at 11 a.m. Central, and I try to teach about a chapter of the book when I have the hour-long class. You can email me if you'd like information on how to get a link to those classes. You can also email me if you'd like information on the toughest accounting topics and sign up for that class, those classes. Thanks very much, and we'll see you next time.